So you go to the grocery store probably a couple times a month throughout an entire year. Well, let's pretend now we're in April of 2020, and the grocery store sends you a check in the mail. And this check is sizable. It's several $1,000s. And the reason why they're giving you this check is because every time you went to the grocery store in the previous year of 2019, you were overpaying for your groceries. How would this make you feel? Now, some people would think, wow, that was super nice of them. And you might even feel like, I won. I'm getting a check of money I didn't anticipate getting. But here's the reality. There are a lot of things you could have done with those thousands of dollars. You could have paid down some debt and paid less interest. You could have invested and earned some interest. You could have put some money in a savings account just to feel better about your personal financial situation. You could have maybe even gone on another vacation with your family. Thousands of dollars is a lot of money. So if it's me, I'm probably frustrated with the grocery store because I was overpaying. Here's the reason why I tell that story. Too often, when it comes to filing your taxes, people think that they've won if they got a tax return, especially if they got a really big tax return. That's not necessarily the truth. You didn't win. You just gave the government an interest-free loan for 12 months. So as we talk about some tax planning tips for the year 2020, it's important to make sure that you are adjusting or at least reviewing your paycheck withholding. How much taxes is coming out of your paycheck prior to you receiving the income? You guys, there's been a lot of changes to the tax laws, especially with the Trump administration. And there's a good chance how much money is being taxed to you has changed. So this year, in the year 2020, make sure you evaluate your paycheck withholding, because in an ideal world, you're not getting thousands of dollars for a return. Ideally, you're getting just a little bit back, or maybe even paying a little bit. Interest-free loans are great, but for me, I'd rather not give an interest-free loan to the government or that grocery store. Another tip for tax planning for the year 2020 is make sure you make your IRA contributions. This year, you can do a contribution up to $6,000. It used to be $5,500, but now it's $6,000 per person. So a husband and wife household, that's a total of $12,000 that you could potentially start investing, defer towards retirement, and not get taxed on. So these are two simple tips that you can apply to your personal financial situation that will not only save you money, but likely increase the quality of your financial life. If you want more information like this, we're producing these videos on a weekly basis. Subscribe to our channel and hit the notification bell so you get notified every time one of these videos comes out.